How's it going, guys? Good to have all of you here. I'll welcome all the speakers up on the stage, but have a very, very exciting panel today where we will ask ourselves, do we need so many tokens in crypto? It's a question on all of our minds. Some will argue that tokens are the lifeblood of crypto. Others will argue that we have way too many tokens and projects are just trying to cash out quickly. So I'll be joined by some amazing speakers who are much better than I, so you can hear directly from them. So without further ado, if you guys want to come up. And try to sit in front of your picture. Yeah. So the only person who's running late because Bangkok traffic, as all of you know, is absolutely horrendous, is Alex, who will join us in just a bit. But I think we have an amazing list of panelists already who can get us started. So we can kick things off with just brief intros. So if you want to get started, and we can go left to right.
Sure. Right to left. Anyway. Hi.
Oh, right to left. Sorry.
Right.
Well, I'm from the US, so we do everything the opposite way. So, I'm just always messing up my directions.
Good morning, everyone. Thank you. Don't mind my small jokes. My name is Nirun. I'm the CEO of Binance TH. So Binance TH is the regulated license exchange in Thailand under the Binance brand.
Hi, I'm Chanakarn. I'm from SCB 10X. We are a technology investment arm of Siam Commercial Bank and SCBX, which is our parents' company, and have financial services solutions provided in Thailand. Yeah, excited to be here and happy to share VC institutional view on this.
Hi, everybody. I lead the ABS team at Eigen, so oriented around bringing new microservices to market and then focusing on kind of the soft stuff. So not as much technical, but how they think about go-to-market, cap intro, and fundraising, and things like that.
Hey, I'm Felix. I'm the head of ecosystem at Symbiotic. Symbiotic is a modular multi-asset restaking protocol. So as I said in the name there's like the potential for a lot of tokens to be used in restaking through Symbiotic. So I'm excited to talk about that today and see if we can bring some utility to all these tokens we're creating.
Perfect. So we'll kick things off with a very, very easy layup. Does every project need a token? What do you guys think? We could also start from right to left.
Okay, go the other way as well.
Yeah, I'll change it up.
So I think there are a lot of tokens, right? And there are a lot of projects. So now the question is, what does a token do, right, for that particular project, right? Or sometimes, many times it's about governance, to do votings. Sometimes you get, if you're lucky, you get some shares of the revenue of the projects, right? It really depends on why do you need that token, right? The token is great in terms of you have that token to engage the community on top of just using the platform, so that you feel like you own that token and you become part of that community to support the community or that particular project, right? But does it really need to have that token? Then the question is, what do you get out of that token, right? If you're just there to be part of the community, if you assign enough value to that factor, then sure. But to me, I feel like every project should have more than just one or two features, right? It should have a few more benefits for the token holders. So I generally prefer to at least buy tokens that the projects feel generous to share more of their ecosystem and their more the benefits to the token holders.
Yeah, I think I have the same view that is it necessary to have the tokens or not? Is it for governance? Is it for community? But if the project provide infrastructure, for example, payment rails, you have to get back and think should we use this stablecoin or use the protocol tokens instead? Yeah, I think that's the important part, that weight about the risk and benefit of having the tokens.
Yeah, I mean, I think the answer is definitely no, but realistically, I think it's kind of hypocritical from perspective of, I think everyone wants to have their own token, and then people build on top of them that don't have tokens to create some sort of value accrual back to their assets. So there's a massive premium that's marked up from previous rounds and kind of how you go to market by launching a token. I think that it's relatively difficult to ignore that and to convince people that they shouldn't launch a token when there's clear value attribution to core members of the team, to their investors. I think it's a losing battle.
Yeah, agreed. And I'm glad you brought it up because 3 of the panelists here have a token or will have a token very soon. So Eigen and Injective have been around a while, and Symbiotic will probably have a token soon. So I agree. It is hypocritical to say not everyone needs a token because the way I think about it is it's the only liquidity avenue for most of these projects. We're never getting listed on the stock exchange right now, right? At least probably not in the next few years. Who knows? Maybe the current admin will change things, but it's really the only way for you to raise funds and bring awareness to the project in many ways. And many of the caveats are perhaps negative, and we can get into that later. Like maybe you have a lot of airdrop farmers, etc. But ultimately, most major projects we know today in crypto have a token. So yeah, just want to also bring that up because I definitely want to make sure we want to have an engaging debate. I want to make sure not all of us just say, oh yeah, not everyone needs a token.
So just to add on, just to follow up on that point, right? I think unlike stocks or bonds where you know as a shareholder of the stock you get dividend or you participate in the upside of the stocks, right? Because the stock do well, revenue, blah blah blah. Bonds you participate in the one day you have to return the money. But when there's a token, and sometimes it doesn't go through all. There's another questions around regulation, right? It's like when you issue a token, you don't necessarily. It's not very obvious what this token gives you, right? Unless you go and actually study every feature and every benefit of that token, right? Sometimes it's just okay. This token is for governance, and you get to vote. Great, right? But a lot of people, like a lot of my friends who buy specific tokens, thinking that it's like a stock, but technically it's not, right? So to me, really giving out tokens, especially to retail, give the impression that this is part of you participate in the upside of this growth and you get a certain return from it, when actually may or may not be so, and sometimes you mix that up. So that's where I feel like we have to educate our users in terms of the tokens that you get into, what exactly you get.
Yeah, that's well put. I would maybe push back and say most projects, if you really cut deep, have very little utility for the token. And this is not a bad thing, right? Most DeFi tokens are primarily used just for governance. Most L1 tokens are primarily just used for perhaps governance plus staking. But I wonder, is it appropriate for us to value these tokens the same way as traditional companies, right? Because before this panel, I was looking up some statistics, and this surprised me even. Right now in the world, and these are just estimates, there's about 360 million companies globally, and only about 55,000 companies have a stock or are publicly listed. Crypto is wild because in crypto, we have about 2.5 million tokens, and there's about 5,300 tokens being launched every single day, especially with easy avenues like Pump.fun and other ways. So it seems like there's obviously way more tokens being created than there are stocks being created. But at the same time, I would argue crypto is such a different industry where the token is almost a form of community for you to build community. So maybe we can touch on that component. It's like, I'm sure all of us will agree maybe most projects don't need tokens or there's too many tokens being created. But let's talk about the positive side maybe. And maybe this time we start off with Felix on what the token can enable.
Right, totally. I think that's an important point. I also think there's an important distinction to make. If you're talking about like a project in crypto, like are you building a protocol or are you building some sort of services company that services the ecosystem, then probably you might not need a token as a staking company or exchange. Of course, then it's rather hard to justify it. If you're actually building a decentralized protocol, then the only way to have it decentralized is actually to have a token and form the governance around it, include it in sort of the utility of the protocol, because otherwise, like some centralized entity will make those choices. Or if you're lucky, you can, I guess, build a protocol that actually doesn't need a token at all and becomes like sort of a public good or utility on Ethereum. But yeah, for most of the protocols, they also want to capture a value somehow, and that's generally then included in the token utility. I think from sort of the community perspective, right, there's the other side of a token that is it's also a meme or like a sort of the social value, and can be money even, like a token, right? Is this other form of money if you're big enough, like ETH and like the major L1s basically compete for that, because otherwise we're building a new financial system. Maybe some people are not so happy also with the fiat money, and then like tokens that provide utility or like can have like this moneyness status, like as a store of value, as a medium of exchange, then they can also like get that premium and create another utility there, which is like kind of reserved for much larger decentralized protocols. But I think that's an important one to consider. I think even meme coins actually try to compete for that by just actually having no other utility than just this money, like social value, which is kind of like an interesting one. I'm curious to hear other people's thoughts on those.
No, I agree. And that's a great segue for the next topic I want to discuss anyways. But I also quickly want to take a 5-second break and introduce Alex, who just joined us, if you want to say something.
So sorry for being late, everyone. Traffic here is unrelenting, as you maybe experienced. Quick introduction, I'm Alex. I'm one of the senior partners at Republic Crypto. I've designed just under 100 tokens in my 6-year tenure at Republic Crypto. And we've accumulated just north of $500 million on those tokens that we've designed. And thank you so much for having us, having myself, because I'm super passionate about this topic. And so I'll turn it back over to you.
Perfect. No, appreciate it. Okay, so piggybacking off of Felix's last comment, right? And I'd love for one of you guys to chime in. So when you think about the utility of these projects, right? Right now, it seems like the entire crypto market, for better or worse, is only focused on meme tokens. If you look at current narrative trends or anything else, most social attention, most upside, arguably, is coming from the meme tokens, which, to Felix's point, usually have no utility outside of just the community aspect of it, right? There's no like usually staking involved, or no one thinks it's a store of value probably other than a meme. What do you guys think about it? Do you guys love it, hate it? What do you think? And maybe we start off with, Luke, you could start.
Yeah, I mean, I love it. I think that there's like a broader problem here, and like I think probably if we look at tokens like Eigen, they're a part of that. It's very difficult to create generational wealth from these large VC projects that go to market and go out at a $1 billion, $3 billion, $5 billion rip on day one. Like you're not going to get that 100,000x that you used to get from old projects that existed in this ecosystem, right? And like whether it was Bitcoin or Ethereum or Polygon or whatever it was, that like you saw these like insane returns for people that became evangelists for that community. I think that meme coins are like the complete other side of that spectrum, where there's no utility, but I think it points to a broader problem that people are frustrated with how the venture community has kind of come into this space and has overinflated things on day one to the point that they can't really get the value that they want out of crypto. So they're willing to take these basically like gambling style risks, but I think if you are launching a coin, like a lot of what I talk to our team about is like if you're moving through that process, creating evangelists in your community is incredibly important. If you have utility and you start at a place where people think they actually can attribute some value to your ecosystem, they're going to be pretty fired up to get involved if they 10 or 15x over a shorter time period because you undervalued on day one. And I think that's going to be something we see over a longer time horizon.
Well put. I agree. And I saw a lot of nodding heads, so I assume like most of you agree with Luke. But let's make the conversation a bit spicier. Do you guys think...
I actually don't.
Oh, you don't agree with him. Sorry. First, we could get your point. But I was gonna come to you anyways because my next question was gonna go into the spicy VC side. Do you guys think fundamentally you guys are part of the problem in terms of overvaluing these projects and not allowing people to have much upside in traditional projects, so they have to turn to memes to make the upside? And this is a question for you, and then Nat can chime in as well.
So I don't think we should be allusion to the idea that cryptocurrencies have always been postmodern mimetic assets. I would argue with even Bitcoin, it is ideology-centric. It is not business-centric, financial-centric, anything of this sort. Ideology, however, is not monolithic. And so when we look at short, the communities and the cultures that we've brought into crypto, Bitcoin, the OG, had not attracted such institutional.
I've never heard of Bitcoin. I'd love to learn more.
Yeah, right. And so I think the simple way to look at it from a top-down standpoint is whose ideology do you cater for when you create these assets? I think in regards to utility, it's clearly a requisite but entirely insufficient method for creating something which is culturally valuable. Utilities certainly help give certain members who I would argue are a part of these ideological cults some feeling of safety, some feeling of concreteness, but it sort of sits in as a veil to the idea that ultimately you're finding a sense of belonging with an ideology for which you've either self-derived or for which you have aligned yourself with, and the collective hoarding of capital into this asset is a representation of how strongly supported that ideology is for any variety of incentives. And so what VCs had done, right, is pumped their own ideology in a way. Just to go to your second question, which is how do we make this something that is worth investing in from a return standpoint? That quickly, in its design philosophy, then created all of these high FDV, low float, essentially VC rug tokens. Whether we are a problem of it, I take a little bit more of a nihilistic case on it, which is we were always doing what we can support any group of ideologies based on who is also incentivizing us. If a piece of those is going to come from meme tokens, and then we'll go design more meme coins. We'll do more fair launches and things of this sort. But at the end of the day, it requires the talent, first and foremost, to think of these cultural ideological assets to create. Whether you're on the investment side or things of this sort, you have to accept the game or try to necessarily change it, depending on how tightly you hold your own ideology.
Agreed. No, that was very well put. But do you think, and maybe Nat can chime in now, do you think it's mainly entirely up to the projects, or is it up to the VCs when setting these valuations? Do you guys feel pressured that, hey, we agree that high FDV, low float is kind of a scam, but there's nothing we can do because everyone else in the market is doing it? So do you feel like you're sort of a victim of the trend, or how can you potentially fight against it, I guess?
I think I want to start with the, because I'm from like institutional VC, right? So we probably see like the investment in meme coins, so pump the, these meme coins tokens as a one of the investment for us, right?
So you guys actually believe in the thesis of memes?
No, I mean like, we always support the transition between from Web 2 to Web 3. From the users from Web 2 to understand more about Web 3 and coming to be part of the community, right? I think meme coins definitely, we cannot deny that it draw a lot of attractions from Web 2 people to want to know more, like the mooding one, right? That has cultural value.
You guys can check out Uddin in the zoo.
That also has cultural value and has the community, right? But so I'm not assume that all meme coins are valueless. So there's like a project that.
But then how do you value that, right? As a venture investor, have you guys taken a look into memes? Like for a project, it's like, oh, Eigen layer, they have this much TVL, let's value them at this price. And same for Symbiotic, perhaps same for Injective. But how do you sort of think about valuing a meme token as an institutional investor?
It's interesting because, frankly, we don't really like invest in this kind of assets, right? But we, it's in our ecosystem, so we are aware of it. Yeah. However, I feel like a lot of platforms, a lot of protocols right now are bot nominated. So it's really hard to justify the value. And when bot nominated, like every second there's new meme coins, right? And meaning that there shouldn't be utility. Therefore, there shouldn't be value, right? Yeah.
That's an interesting take. But does Binance disagree? Because recently Binance has only seemed to list meme tokens. So clearly you guys must think there's a lot of value in these tokens. So how do you guys think about your listing process, or how you value these tokens when you list them?
I can't officially comment anything on listing, just for the record.
No worries.
But
I tried. I'm trying to make it spicy. You know?
my personal view is this, right? My personal view is I take a more capitalistic view on this, right? Whether it's VC, I don't want to say VC rug, but like VC tokens, which high FTV, low float, at some point, it will have to autocorrect, right? Because I know, because in the past cycles has shown VC that, whoa, this makes so much money, and they put a lot of money into it. I'm sure when it got launched on exchange, the value dropped. I'm sure they still have these tokens in their pockets, right? And they also lose value from there, right? So I think it will autocorrect in the sense that VC will understand long term it might have overhype, and then now there will be some point where the right valuation for such token with such utility will be around there, right? The fact that exchanges list token at that price, that means there was a price, there's in any transaction buy and sell, right? So the price has to be, there's a buy and sell at that price, but once it's launched, nobody wants it anymore, it's just got dumped, right? Then over time, the next rounds of VC-backed tokens, I would assume that it will not be as extreme as the past round that we have seen, right? On meme coins, it's also a capitalistic view, right? So people have limited money, right? So if I don't want to invest in all the VC-backed tokens, I go to 0.0001 Mudeng token and it gives me 10x. Why don't I go there, right? So it's that as well. But at the same time, the Sudeng or many other dengs that are relative to Mudeng go to zero. So it's a capitalistic view. You have to think about, like, you put $10.
There's like meme forks. I didn't even know Sudeng.
Sudeng actually exists, and Sudeng is okay. But there's the Mudengs. So when Mudeng came out, Mudeng is the hippo, right? The keeper of the hippo was a token. The Su name was a token. Everything around the Mudeng is a token, right? But only Mudeng and maybe some small other things sort of exist, right? Sort of last. The rest just went to zero. So again, people go into meme coins, but people who think they will get rich in meme coin, some of them get really rich, some of them get really wrecked, right? So it's capitalist view, right? So you think about like where you invest your money in, long term. People will realize that not all meme coins make money and not all VC-backed tokens lose money. So
of course. No, I agree with you, but my only pushback on that comment is I agree, like it's highly speculative, like meme tokens in general, and they could either go to like a bajillion or zero. But the counter argument is recently every major token that's listed has gone down only. So as a like retail person or an institution, would I rather take a gamble on a meme token, or would I rather purchase one of these overvalued tokens that basically have zero upside? So how do you sort of, and this is a question
for everyone, yeah.
Like, how do you think about this? Felix, we haven't heard from you in a while.
Yeah, I think, I guess the high FTV, low float model is kind of a result also from a regulatory uncertainty environment, and many projects choosing to play it safe and sort of following the meta of just airdropping a few tokens and then, over time unlocking and maybe getting listings. And the existence of meme coins probably is a result of like sort of ICOs not being a thing anymore, right? Like I guess in 2017 or 16 you had more people selling the dream in a white paper and it's just straight up an ICO and everyone has access to it. Now people have limited access to these VC-backed tokens before they are in exchange, and I think maybe, I guess that's a hot take, that I feel like a lot of people are having these days that with the regulatory change in the US right now, this meta might change a bit, and some of these token distribution models that see a higher supply straight at launch might make a return.
Back. Yeah, maybe ICOs will come back.
Yeah, and so then maybe that will alleviate some of this. I do think that also like the project, it got more complex. You have more projects, crypto grew overall. So it's not that easy to invest anymore, which is also a sign of maturity, making it like harder for retail to evaluate, okay, which of these techno-gabber projects is actually going to do something, and then they just opt for meme coins because, well, at least I know what I'm getting into here. But I think that's just the nature of it, and I think it's still good that a lot of money goes into infrastructure because obviously we're like kind of not fully ready yet in terms of like taking on mass adoption. I think we're getting much better, right? Like we're seeing a bunch of announcements here also from Injective today and other ecosystems that show that crypto is ready to take on like the big leagues in the world. But overall, there's still like UX scalability problems to be figured out. So I think ultimately just having a bunch of investment in that area, and innovation is a positive thing. And I don't see that with meme coins as much. It kind of trickles down somehow to infrastructure because, MEV money is made from pump.fun on Solana or whatever, and the tokens are burned and all that. But I guess otherwise they don't really contribute much to the development of the technology directly. I think, and some of that money is worse invested, from my view, than putting it into some of the established infrastructure projects, which maybe are boring, like you just buy ETH, like no one wants to do that. They want Mudang or Bitcoin maybe. But ultimately, that's probably the better longer-term investment strategy.
No, well said, well said. Unless someone had a final point on meme tokens, I want to move on to the next topic because I feel like we spent like 20 minutes on meme tokens. So let's take the completely opposite flip side, in my opinion, and think about, in my opinion, one of the more boring sectors, which happens to be tokenized assets or real-world assets. Compared to memes, they're not as fun. But it seems like a lot of institutional flow, a lot of the mature sort of industry participants that Felix was alluding to previously are more interested in RWAs than memes, right? You're probably not going to see Van Eck buy a meme token, probably. But you will probably see them buy tokenized treasuries on-chain. So what do you think about that? It's a new form of token that's sort of taken over the last year and a half, I would argue. Obviously before that, but I think the term was more so popularized in the last year and a half. Do you think that tokenized assets are good for the industry, or do you feel like it's so boring that it's just bringing traditional TradFi on-chain, and we don't want that? We want crypto to be very different. And Alex, I see you want to go. So
yeah, I'll be careful of this because Republic is extremely into RWAs, and we're building out many other businesses' lines in service of RWAs. But my short answer to it is that it is a different industry.
Yeah.
It's a completely different industry. I think much like all attempts to digitize existing assets, even prior to Web3, they always will have an adverse selection bias at first. Those who try to do tokenized real estate or fractionalized real estate or tokenized equity and such, these are folks who are desperate for liquidity in a world where IPO markets and other public markets were not doing so favorable for them. These will not, in my view, inherently trade off of ideology in this case. Those are existing things that trade off of Wall Street-based valuation models, DCFs, multiples on revenue, PD ratios. So it is, whether it is good for the industry, I actually think it's almost orthogonal to the rest of crypto. And we treat it very much as such. So I don't see it as a threat or a boon.
I think I used to be at BitGo for a bunch of years, and we had a very similar opinion of we had a different sales team. That we had a sales team that was BNY guys and all these people that could talk that talk and have that language. I also think you're just going to struggle to get the quality, and there's probably already people in the space that have this, but when you're talking about that space, the asymmetric upside is very, very difficult to actually quantify. So getting people that are making a fuckload of money on Wall Street to go and play in this space is incredibly difficult because it's just there's no, they're taking on more risk without having the asymmetric upside from it. So I think in general, you have to have people that are ideologically believe that things should be on chain, and until we're able to figure out a way to drive more TAM and more revenue to the people that actually are selling those products, we're going to have a very difficult time of actually bringing on legitimate institutions that are playing in that space. I do think the technology still needs to move a couple more iterations down the road, but we're close enough to bring on a lot of serious players like Wisdom Tree and others. It's just now a matter of how do we do it at size where this becomes no longer a toy and it's more of a real part of their business.
No, agreed entirely. Did you guys want to chime in or add anything? Because I have a follow-up to the RWA question. Yeah. So the follow-up is basically, when I think about the RWA sector right now, obviously there's a lot of innovation happening, but in terms of what's gotten actual adoption, I'd argue it's only really been tokenized treasuries. And you could argue ETFs, but I don't think ETFs are obviously a tokenized asset. So do you think that's going to change? Because the other iterations we've seen, whether it be tokenized real estate or tokenized watches even I've seen, none of them have any volume or any traction. So what do you think might change that or spur actual adoption of RWAs beyond just tokenized treasuries? And someone else start who didn't go in a while. So either Nat or Nirun.
I think, to follow up on Alex, I think tokenized assets are great. I mean, it it will not. I agree, but it will not impact crypto per se. It's a completely different things, right? But it is a bridge where people who don't know anything about crypto starts, oh, okay, tokenize Tesla stock. I get it, what it is, right? And I think for it's for bringing the well, people said next billion people, whatever, just bringing the other mass people who are not crypto like us to understand crypto better. So, oh, this thing is now on chain. What is on chain? Why do you need the chain? Why do you need the wallet address? So that's, to me, it's a next step for making blockchain become more mainstream, right? And I do think that there are a lot of benefits on to tokenize these assets. Well, of course, I also have similar view around tokenized real estate. It's a bit too hard, in my view. But for large quantity assets, maybe you can tokenize oil, right? Then you can settle oil anytime, where you don't have to go to US dollars. There are many ways you can tokenize certain assets and make settlement layer much easier when it's on blockchain. So there are some benefits to it, but I think all of this will not impact all the rest of crypto that we live in.
Yeah, agreed.
Yeah, like RWA tokenization is like different kind of investment, and I agree with you all that it's like target a new group of investor to be able to access to a new type of asset. For example, the retail investor in Thailand cannot access like tokenize, money market fund, or tokenize bond, right? But cannot.
So I actually hear that argument a lot, but my pushback is: do you think the average retail person even knows what a tokenized bond is? Do you think even if they had access to it, they would even buy it?
No.
Yeah, no, and that's totally fine.
But at least when it's tokenized bond, then you're not subject to the top normal trading hours of 10 to 4 p.m. Right? So
I agree. I agree with the
yeah.
benefit of it, and I think all of us are obviously in a bubble of where we're privileged enough to have access to these assets in general. But most people, even in the U.S., I think less than 50% of people in the U.S., I could be mistaken on the stat, actually even own stocks. So what do you think will drive that actual everyday person adoption? Or do we think we don't necessarily want that audience for RWAs, and it's mainly going to be bigger institutional players? Because if you look at a big project like Ondo, if you actually look at on-chain stats, yes, their TVL is very high, and this is me not calling out Ondo in any way, but the number of active wallets participating in that asset are very, very small. So it's actually like large whales and players participating rather than small guys. So do you think it's mainly going to be a game for the rich, like RWAs, or do you think there's a way that everyday people participate?
Yeah, I think the first wave of acceptance will be from the crypto participants, like people who cannot access to money market fund last year, right? Right now they can access through Ondo Finance, like in order to get like higher yield, from different part of the world. Yeah, I think that's it's open up the opportunities for people who haven't have access before, and people I think it's based on the after the first wave, the second wave will be driven by the regulations. We have like a couple of portfolio companies that working on real world asset tokenization. We have a subsidiary in Thailand called TokenX, trying to tokenize real estate, talking to SEC, filing to disclose the information for public in order to educate people about this type of asset and new opportunity. And we have a company we have license in Singapore, have license in Switzerland, but the problem that they all talked about is the liquidity. People come into the market but doesn't have liquidity, right? They buy the primary offer but doesn't have way to exit. So after we talked to the regulators in various jurisdictions, and we find that they are working together, like trying to standardize the tokenization process, standardize the blockchain use, and trying to have this platform that open up RWA asset can be issued and trade. Yeah.
Well said.
I think the only thing that I, like very briefly, you mentioned something kind of funny earlier, which was that there's so few companies that IPO that are like in the public markets. I actually think like tokenizing cap tables is a very complicated and actually like a very difficult problem. But there's so few people that get asymmetric upside from like traditional companies in the space. I actually think that's the only thing that like I get relatively excited about is if you could actually tokenize the cap table and let VCs clear out a little earlier than they do when they have to IPO or sell in secondaries to other VCs. Like allowing people to get that exposure to private companies by being able to buy stuff on secondaries in an easier way. Like that's a very ugly market right now, and it's a very confusing market. And unless you have billions of dollars, you're not going to play in it. So I think it's the only thing that I think about that I'm like, I think people will be fired up to get into private companies earlier than they do today and start analyzing
like
that.
rich people or everyday people would be fired up to get into those companies?
My opinion is everyday people don't have the money to invest in anything, and they really struggle right now to pay their bills. That's why they buy fucking meme coins for $50 because they're going to roll the dice and see if they can all of a sudden make a lot of money. I don't think a conversation around like how do we get everyday people to invest in gold is a relevant conversation to anything that any of us should be doing over the next couple of years.
No, I agree with you entirely. But that's what's so disingenuous, I think, about a lot of the marketing I see in crypto, because they make it seem like these assets are bringing the next billion users on chain. And the reality is they're not. But maybe it will in the future, like inspire those people to onboard, but they're probably not. Yeah. Agree. I'm glad we have an intelligent panel.
Yeah, I think I do have a bit of a spicy take there. I guess many here said, okay, it's like a different asset class or like separate, but ultimately we do want those RWAs to be used in the crypto economy, right? We're building like alternative financial system fully on chain and transparent, and many of the issuers of these assets are like in the traditional finance world, and they basically have an incentive to not participate in and kind of keep the system they currently have. I think like for these assets to move on chain, there should be like composability with the existing like financial primitives and DeFi, and the utilities should be higher in the crypto ecosystem, so they're forced to come here. And I think this is actually happening, as we see with all the companies like working in this field. And then I guess the ultimate goal would be to move this whole system on chain, and then it being so composable and easily accessible by the everyday user that they can just use it on chain, right? Like ultimately, like Terra, I guess, was an example where retail users could use Luna and earn 20%. There was like a lot of like other things packaged there. I think the form factor was kind of right. Obviously, like what was in there wasn't the greatest, but I think through RWAs and through like sort of smart accounts and next generation crypto apps like Infinex, we can have everyday users like sort of use these tools and access them on crypto, and the user experience will be better, and we actually get adoption in the real world from our new decentralized financial system.
I could agree with that. I think that's also a fantastic example. Obviously, everyone thinks Terra is a horrible word, but I think they actually were an initial proof of concept as to how you can have a seemingly complicated product but have retail gateways that actually work. We only have like 3 minutes left, so do you have last thoughts on this, Alex, on this RWA topic? And then I'll move on to the last question.
I'll make mine quick. I'll try to. Stocks only became a retail product when stocks became postmodern themselves. No one can convince me that something trading on a 50x of a 12-month projected revenue for a stock is actually like fundamentals-based valuation. It is pretty inherently arbitrary. So the only trigger that can make RWA direct to customer is if other assets following equities actually somehow have memeable assets to pump. You know, we all remember the GameStop and AMC memes, right? That's not so different from us, but I would say for now, RWAs are inherently reformational. They, if any, to the existing system, they will only go to the customer through existing distribution systems like wealth managers, retirement accounts, things of this sort. We think at best, and the rest of crypto is a radical reaction and a different movement in a great departure away from it. So I don't really believe in. I think any attempts at the middle will just fizzle out.
Yeah, let's not mid-curve. Let's just go to the other ends. Yeah. Okay, so the last question will be probably the spiciest one. I'll give you guys like 30 seconds to think about it. But I'd love to know from you guys what you think is the most useless token that's live right now and the most useful token that's live right now. And ideally, don't answer the same way. Ideally, everyone can have different answers. So if someone says Bitcoin, please do not say Bitcoin again. I'll give you guys like 30 seconds to think, and then we'll start from left to right. Right to left, sorry.
I can just be quick with it.
I'll wait for everyone else, like 20 seconds, and then I'll start. But yes, we can start with you. Okay, let's begin. We can start with Alex because he raised his hand.
Sure. I would just say I reject the premise of the question. Tokens are not about use.
Okay, but what do you think should be the premise of the question?
The premise of the question is.
I think it's obviously like a subjective premise. Like whether or not you believe it's useful or useless is up to you to define what you think is useful and useless.
The opinion has already been decided by the market.
Okay, so you think anything that's high market cap is valuable and anything that's low market cap is not valuable?
It is to the market.
Okay, all right, I'll take it. Felix?
Yeah, that's a very good answer. I'm going to say Injective. No.
It's the most useless.
I'll leave that open, which one it is. No, I think the most useful to me is ETH because I guess it has just the metrics and showing like the usage of the gas as a gas token, burning the ETH, and you can just see like people are willing to pay high transaction fees to use Ethereum, the world computer. Are they roll-ups? Are they direct users? Whatever. I think that's pretty clearly shown like the utility to me. And then useless, I guess, yeah, can argue a lot there. I think like you said, the market decides that. Obviously, like some of the meme tokens, I'm not like the biggest fan, but you know, if they create like excitement and some adoption of the crypto like tools we're building and somehow bring value and don't destroy like I guess some lives. So I guess then it's good. I'm just like more afraid, you know, people getting into like meme coins, spending all their life savings on it and then losing it all based on some sort of like belief that they would make them rich. So I would tread carefully there. Yeah.
Cool. I like both answers so far. Luke?
I'm going to take a different perspective of like the most useless. I'm going to say the one that I think is going to get absolutely fucking blown up in the next like couple of years is non-yield bearing stablecoins. I think you had Nick somewhere. He's on here. Like that market's going to get totally destroyed. And I think there's
so you think
centralization
even
issues.
Things like USDC or USDT will get destroyed because technically
I mean, like what's the point? They're just
no. I like it. It's
like
I
don't know. Like I just really struggle with the concept that this centralized thing that doesn't make any money for the people that are utilizing and taking the risk to that counterparty asset. When Silicon Valley, I worked at Silicon Valley Bank, so I could talk about it. When Silicon Valley Bank like almost did blow up, like USDC had all their fucking money there. If they had lost that money, that entire market's toast. Like that is a fundamental issue in this space, and there are people that are at least passing on that yield. Like, and I think that is an area that we're going to see mass outflows to. I think there's a lot of people playing in it, but I do think that is, in my opinion, the most useless assets in the way that they either need to innovate or they're going to get absolutely destroyed.
Yeah. I mean, the business model is they're just keeping all the yield for themselves. Do you think if they decide to share the yield, then they're yield bearing?
100%. At least you have some rational reason. Right now, it's a distribution thing, right? That's why they're there. I think applications are smart. I think that users are smart. Like I think it was the best of the current situation. That is no longer the case. There are people that are doing it the right way, that are passing on that yield, and they're doing it in a regulated and thoughtful way. And I just don't see that market existing where intelligent people are going to look and go, why the hell am I putting my money there when I can get 5.5? Like,
Agreed.
Unless you want holding Coinbase, which I guess is another whole thing, is then you're holding Coinbase. So it is what it is.
I agree. Okay, second one, and you can be quick, useful. What do you think is the most, no, Luke didn't answer, I think the most useful.
Oh, it's Eigen. No,
nice. I'll take it.
No, I actually agree with Felix. I think it's ETH. I really do. I think that there's going to continue to be a lot
We need
of
more ETH
innovation there.
proponents. ETH's been getting a lot of hate, and I came into crypto with ETH, so I'm always going to stand up for it. So, agreed. Nat?
Yeah, I like your answer, Luke. It's interesting. But for me, I think I would want to play safe on this and probably on the nature of asset itself, for the useless one, probably the one with no utility, no value, probably a bot created coins, right? But for the useful one, maybe the one that decentralized and have the utility, the use cases that people can.
What do you think it is? What's your pick?
I cannot say.
Okay. All right, I'll take it.
So I guess I'm tempted to say BNB, but
okay.
I guess, well.
Which category are you putting BNB in? Useful or useless?
Good question. No, I think of course, I think I agree with that we should look something a bit more long-term that can create some value, right? So obviously ETH is number one right now, and I know a lot of layer one is trying to do the same, right? ETH itself is great, but it also has a lot of limitations. It's a bit too big to be very flexible right now. So let's see how Vitalik's in town, how he's going to handle with that. But for now, obviously, ETH and the leading layer ones are probably the one that's leading the transformation change, right? And for the useless tokens, I'll guess most tokens on Palm.fund for now. Yeah.
Okay. Good takes. Well, I, for one, very much enjoyed this panel, and I hope all of you like the debate format of it. So a huge round of applause for our panelists. Thank you so much. And I'll leave you guys to it. I'll leave you guys to the next great panel. Thank you.
Thank you.